Hello trader, my name is Xauusd FX. Welcome to Xauusd FOREX channel, where we go deep into the world of forex. Okay, if you are new here, do not forget to hit the subscribe button and also click the notification bell so you will not miss an update. Okay, today video we just want to look at the trade we took during the week, just like a trade recap. So let's dive into the chart. Okay, we want to look at this particular trade. We took it on January 15, 2025. So we want to look at why we took the trade, what are the strategy behind the trade, and why does the trade works, and what is the percentage, or what's the probability of we winning the trade. So that's just everything we want to talk about today, and just looking at the important thing is looking at the strategy behind the trade. Okay, let's go into the chart. Good. So this is 1 hour chart. This is 1 hour chart. You can see that the 1 hour chart is bullish based on the market structures. So looking at the market structure, starting from here, though this is not the exact, but I want to, I entered the trade on lower time frame, that is 5 minutes, but there is something I saw on 1 hour that make me to enter the trade. But I want to show you the top down. I want to show you just the market structure on 1 hour. So someone that use the top down analysis, so which means that I start from daily 4 hours until 1 hour, but let's focus on 1 hour. Then I will show you the point of interest I saw on 1 hour that leads to going down to 5 minutes to check for entry pattern. Okay, all right. So I saw this market structure was bullish based on the fact that market is breaking every highs and every low is protected. So possibly I was looking at this high, and the first thing I saw was like, okay, if the high market can go to is this high, and market breaks this high too. So we have market structure being bullish and draw on liquidity as this. So that zone was my draw on liquidity. I was looking at for market to draw to that particular place so that I can enter, so that I can take it as the draw on liquidity. So on 1 hour it is very easy. What you look for on 1 hour or 4 hours is that you look for your draw on liquidity, which is DOL, and you look for your narrative. So which means that you need to know your bias. Your bias is, the formula for bias is direction plus draw on liquidity. So which means that if I know my bias, then I will look for a narrative. A narrative is where is market going to retrace to before going to my draw on liquidity. So that is what a narrative is called. So I have to know all this information before I can go down to 5 minutes or 15 minutes for my entry pattern. So on this day I was particularly looking at market was bullish because market was breaking the high. Market structure is bullish. So the moment I saw this high broken and market has not yet get to the draw on liquidity here, so I was like, okay, what can I do next? Where is the narrative? Then I saw this fair value gap here. So like, if market can come back with this fair value gap, then that is the narrative or point of interest. Then we can possibly trade to this particular place. Then that will be a perfect trade, even though market later go above it, but that is still my draw on liquidity. You can see how market took our liquidity from there and retrace. So on this particular position here, we're looking for our entry. That is where I entered from. So 5 minutes. So on my entry pattern, I just want to look out for market structure broken, MSS plus fair value gap. That's my entry pattern. Liquidity taking, MSS plus fair value gap. Those are the three things. Those are the three components of the entry pattern: MSS, liquidity, and entry and the fair value gap. So when market was trading to the fair value gap, this is the fair value gap on 1 hour. So market was trading to the fair value gap. You can see, let me show you the order flow. This is 1 hour order, 5 minute order flow here. You can see market break this low, and before market breaking the low, market trade to a fair value gap, trade back, market trade to a fair value gap, then trade low again. Market took out a liquidity below here, another fair value gap for continuation of sell. If market want to continue its sell without buying, without obeying my fair value gap. So because I saw a fair value gap on 1 hour does not make me to be a buyer. So I have to go down to 5 minutes or 15 minutes in that particular point of interest, in that particular 1 hour fair value gap, to look for another repetition of what happens on higher time frame. And this is just me looking for an entry pattern where market is going to change from bearish to bullish. So for market to change from bearish to bullish, there has to be a MSS, that's market structure shift. Then there has to be a new bullish fair value gap. So if I don't see a new bullish fair value gap, I'm not going to be a buyer. So even if there is an MSS without a new fair value gap, I'm not going to be a buyer. Fair value gap is just a way whereby market pull up price to go to a direction. It's just a way whereby market enter most of their orders, whether they are going buy or sell. They enter most of the orders from a fair value gap, just to close down a gap that has been created from their high impulsive movement. Okay, our market trace down here. So market doesn't take this low. So here we can have an MSS and SMS. Sorry, that's a failure swing. Then market break this high. So the way market break this high, a high that traded into a fair value gap. So I was looking like, okay, where is the next fair value gap? We have a fair value gap here, and we have another fair value gap here. So people will be like, oh, which one should I trade? The closer the fair value gap, the higher the probability of market entering into the fair value gap. Market may not enter this one, just only this one and go. Every fair value gap is sensitive. Okay, I think we use this because I was not looking at, so my stop loss below here, and to my draw liquidity on 1 hour. So that is why I took the whole trade and look at it that way. So that is it. This is an MSS, another flow, an MSS, fair value gap. So that is why we took the trade. You can see the fair value gap I used, see my stop loss, and the draw liquidity I did not put to it, but that is the trade. That is the idea behind the trade. It's just SMS, MSS, and fair value gap. Market breaking this high, and also breaking the high, this short time high too. So, and the fair value gap was seen, market straight up back from there. So that is the whole trade. That is the idea behind the trade. You can see how market enters into it and a rejection. So that is the idea of the trade. You can see it here. We possibly having some kind of, and it the trade profit here, 140 pips. So that is the idea of the trade. Don't forget to like, share, and subscribe. And if you are new here, don't forget to hit the subscribe button. More videos coming on trade recap, and also we are starting a series today which is called the market structure. So we'll be looking at market structures, how market maker moves, their footsteps, and how the structures can be used in our advantage. Okay, thank you. Yeah.